Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, February the 14th, Valentine's Day. The year's 2021. Let's talk trading. It's time for the weekly open and gap. And since it's Valentine's Day, I used pink for the color, in case you're wondering why it's not green. Okay, just remember these videos are for educational purposes only. Your results may differ from mine. And once again, risk management. I'm still having traders asking me, well, for this method, where should I put my stop? What should my position size be? No matter what the method is, the first thing you do before you even pick a method is you have to define what your risk is. How much are you willing to lose per trade? Now, if the method tells you where to put the stop loss, then you've calculated your risk. It's telling you where put the stop loss, then you calculate your position size. If you prefer to keep your position size constant, then your stop loss pips will remain constant too. That way, hopefully you don't lose any more on any one single trade than you are willing to lose. That's called risk management. So let's go ahead and take a look and see what's happened today. Okay, most of the gaps have already filled. We have about 4 that haven't. Now, if you notice here, the pound dollar has shot up. It opened inside the launch pad, which is, something in the 40s, whether it's 37.40, 38.40, 36.40. It just seems to launch out of that. And it's launched all the way up to 39.02. You can see right now we're right at the 00 once again. And so we're putting in the opening range here. So for the month and the year, we're nowhere near those ranges at the moment. In fact, we're 198 pips away from the monthly open, 258 away from the yearly open. And we're already up 53 pips from the daily weekly open right here. Price is definitely moving up when it comes to the pound. But there may be a day of reckoning, and we'll have to see what that looks like. Inside bar traders, there's only a handful or so here on the daily. Weekly, we've got more, and the monthly, we've got a couple. But as you can see, we're 217 pips away from an inside bar in the pound. And obviously today is not going to be an inside bar. We broke out of the previous day's high, which was Friday, already 38 pips above that. Horizontal line traders are being paid off again. We had the pivot point below the open. Price never looked down from the open here. As far as the rat zone, I wonder why this chart got scrunched up. I must have been showing somebody something. We're now in the rat zones. You might want to look for the red rats to feast. We'll just have to wait and see. Once again, we missed the pivot. Our weekly pivot is where? 137.98. That's a few pips away. We'll have to see what happens there. We haven't hit the daily pivot. We took out that missed pivot here. We've got a missed pivot here. On the week, you can see last week took out the pivot. Maybe this week we'll take out the pivot. Now, if it was going to take out that pivot, that's all the way down at 3,800, just a little couple pips below. So we'd have to move down 100 and some pips from where we're at the moment to take out this pivot. It could happen. Wick zone, in and out, boom. And looking at the ranges here, once again, last week, I think we covered these on Fridays. These ranges have been pretty anemic on the weekly. Actually, if you want, we can switch over to the monthly, and you can see here once again anemic. So, but when you look at the monthly chart, you know, we talk about looking left all the time, and you can see the prices at 37.01, somewhere around here, and you can see where we're hitting in this area here. So look for one of these to be taken out. In fact, I'm wondering here, this is a monthly. Let me just change up mid dots. Let's turn on the pivots. I want to see something. Did the monthly pivots, mid dots, my period current, show pivot true? Okay. Hey, look at this. We have a missed monthly pivot at 139.48. Something to keep in mind. And it looks like we've got some missed pivots. Another missed pivot here and here in the 150 area. But once again, that might be an interesting target. 139.48. So you can mark that, and we'll just have to wait and see what happens. Walmart lines, we're stalling at that 3,900, to be expected. You can see it hasn't closed above on the H1 yet. Order blocks, you know, I was been working with order blocks, and I'm sure some of you may be more familiar with them than I am, because I've heard about them, but I never really studied them much. And now people sent me, you know, PDFs, and I've been looking. But I have a problem. And the problem is this: I can't seem to find a simple step-by-step formula to determine what the order block is. I've seen like 2 or 3 different tries to define order blocks. I've looked at charts, and one chart, okay, but then you compare it to another chart. It's like, well, how come that order block doesn't do what this order? And so if any of you traders can send me or post a clear definition of order block, where you can take 3 different traders and put them in front of the same chart, and they're going to draw the order block exactly the same way. And I'm thinking you should be able to define an order block in terms of open, high, low, and close of 1, 2, or 2 or more candles. You should just be able to do it. It should be a very simple, you know, if this, then that type of formula. In fact, you know, I like Deming because I studied his work back in the 80s. And he has that saying, if you can't explain what you're doing as a process, then you don't know what you're doing. So I've kind of coined my own quote, and it's this: if you can't define your terms clearly, then you're just making stuff up. And that word stuff can be substituted with another word that starts with S. Because, like I said, I've seen people explain things or try to, and it's like, well, this, but then they never define their terms. And if you don't define your terms, then you like I said, you're just making stuff up. See, right here, I'm looking at this chart right here. To me, from what I've read, this is an order block right here. This candle here forms an order block. Why? Because the open of this candle was below the open of this candle. The close of this candle was above the open of this candle and above the high of this candle. So to me, that forms an order block. And the same thing is true here, because here you have a bear candle followed by a bull candle. Here you have a bear candle followed by a bull candle. Close is above the high. So right here, that's another order block. Okay? So, and that would be a bullish order block. So to me, that's something that's clearly defined. But when I look at the charts from some of those PDFs, or I actually got on a couple of Telegram chats, trying to find a clear definition so I can code it. And then one guy, this is too funny. He put out something, and I thought, okay, well, maybe this guy can tell me. So he says, well, the terms are defined there in that first thing. So I went to it, and he has basically the acronyms are defined, but nowhere does it actually define how you can do that. Long story short, it was, well, that'll cost you. Meaning, I have to either buy his book, take his course or something. And so I just basically replied, I go, well, I guess you don't know who I am. So, and kind of left it at that. Because in fact, way back when, I can't remember which platform or form it was. Oh, we just got a high touch alert here on H1. You can see the prices moving up there. Let me enlarge this slightly. Back then I think it was either Trade to Win or Elite Trader, one of those two. ICT, Inner Circle Trader, was talking about the divergence between the pound dollar and the euro dollar. So I wrote an indicator or two to plot that price divergence. But then I guess I forget how long he was out there. Then he decided to start his own forum, his own website, and he went back and he deleted all of his posts took down all of his YouTube videos or whatever videos he had at the time, and basically just kind of erased the record, and people followed him to wherever he is now. Which that's why I always tell people, if you find something you like on the internet, download it or copy it, do whatever, because just because it's here today, it might not be there tomorrow, especially in this the political climate we're in, the cancel culture, I guess is what you call it. I guess that's what some of the people out there try to do to me, cancel me by banning me from forums and taking down my code. But anyway, that's a little off topic. So once again, order blocks. I'm still not 100% sure of them, but I do know one thing that I'm looking at, just so you know. Like say we can take, we can just look at this chart here. So you can see price has been moving up, right? So then what I do is I look and I go, where is the highest bull candle in this up move? So this candle has like the highest close, and this candle has like a higher high, but these are, and then you got this bull candle here. So what I would say is somewhere from around here, maybe since this one's got the highest close, from the high of this candle to the low of this candle, that would be a order block. And as you can see, price left it, and it's returned to it. It might leave it again. Now, some of these other ones, I've got a bunch of order block indicators coded here. That's why you see, stuff on top of each other, because I'm just trying to still no figuring it out process. But anyway, fellow traders, hope you had a nice Valentine's Day, fun, safe weekend. And just remember, it's not what you trade, It's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.